All right, today is Thursday, March 20th, 12 o'clock Eastern Standard. Let's talk about the pain trade. What do I think would be the worst probable event that would cause the most pain in the market? I think a lot of people are waiting. If we look at the S&P or if we look at the NASDAQ, I think a lot of people are waiting for a further correction in order to buy the dip. And then other people are talking about selling the rip. So if we pull up the 200-day moving average, which is what a lot of people are talking about right now, we're trading below it. That's a bearish indicator. A lot of people are talking about as soon as we tag this 200 moving average, we're going to go lower, so sell the rip. Any strength on the S&P or on the NASDAQ needs to be sold. And then people are trying to anticipate buying a deeper correction. This is the same if we pull up the NASDAQ chart. NASDAQ has actually had a steeper correction. We're under the 200-day moving average. So I think, what is the biggest pain trade here? Well, if it goes lower, that's what people are expecting, and they'll buy the dip and they'll bring it back and it'll rebound. Or if it gets to the 200 moving average, a lot of selling pressure. People are selling. It's anticipated that we're going to tag this at some point, and then we're going to sell off of it. So the biggest pain trade, in my opinion, is we just blow past this 200-day moving average, and we rebound back to all-time highs. But I don't think it's going to be as simple as just going straight up. I think we're going to chop around here a little bit. I think we're going to tag the 200 moving average. We'll come off slightly. We'll break through it. But I'm bullish. I think the biggest pain trade at this point is going to be just a blow off right through the 200 moving average. It's not going to give anybody an opportunity to buy the dip, and it's also not going to give people any possibility of making profit on a sell the rip if we just go straight up. So that would cause pain on both ends. I do think that is a high probability of happening as far as causing the most pain. Now, I did talk the other video, I believe on Sunday, that a good opportunity could have been selling silver and long gold. And we've actually seen that play out exactly right. Silver is showing weakness, and gold is still up on the day. Gold at the time of the video was around 29.90, and now it's trading at 30.46. And silver was at about 34.5, and now we're trading just under 34. So that clearly played out, or could have played out for you. And we are in on this crude oil trade long, which is catching a good 1.5% bid today. We're in on the yen short, which actually had a pretty strong rebound yesterday, and we're not really sure what to make of that. And then soybean meal long, which is kind of just chopping lower here. We've had 4 red candles in a row. That's due for a bounce. We've got a pretty deep stop. These are all half sizes anyways, but right now the yen's pretty neutral. We're down a bit on soybean meal, and we're up decently on crude oil. Now, I've also missed this trade on gold as well that I want to pull up here. So silver's flagged as a momentum buy, which I don't like, and gold is also flagged as a buy. The problem is it gets this heavy price action, this deep candle. It tags 3,000. 3,000, flat number. We can expect resistance, and then what happens? It just continues on trickling higher. The commitment to trader data looks great here. I mean, you've got commercials and speculators that are bidding gold up, and you've got large speculators that are shorting it. So that looks good. That looks good to continue higher. The price action looks good as well, but I don't completely like silver. I think we are getting into some resistance here at 35, and we are seeing some weak price action and a pullback. So those are the only two I'm catching on a momentum indicator standpoint. This market, like I said, I think the biggest pain trade here is if we just ripped higher and just blew off the 200 moving average, don't give anybody a chance to buy the dip, and just make all of the short sellers pay. If anybody wants to short this, because it's so obvious, right? Like, it's so obvious that we're gonna go to a 200-day moving average here, and every time we go below a 200-day moving average, it goes from being support to resistance, and as soon as we get back to the 200, it's going to sell off, and that's the simple narrative that all these technical analyses people are talking about, right? So we've sold off, we're under it. At some point, we're going to reclaim the 200 moving average, but right now, support turned resistance. It's expected that we tag this and then sell off. So I just think it's too obvious of a trade. And I also think, before maybe even getting there, we go lower and then people are going to buy and then they're going to sell at the 200. And, it's just the most obvious trade that everybody's talking about. And when it's that obvious, I think we usually end up doing something different. So we could chop around here for a little bit. We're going to have a lot of volatility. The VIX has been over 20 and it's chopping around. This price actions looks like a bearish consolidation, a bear flag. So what everybody's saying is we're either going to just bear flag here and then head lower and then buy the dip, or we're going to catch a little bit of a wind, we're going to tag the 200 and then sell off. So either way, people are expecting this thing to go lower. I think the surprise pain trade is if we just blew right through this, past the 200, maybe get a bunch of shorts to cover, it goes higher, then it sells off and corrects again. Anything like that, I think, is a pain trade here that could really play out, breaking above that 200 moving average. So that's my current thoughts. Right now, I like crude oil. I like soybean meal, but price action's been looking pretty poor the past couple days, and I like shorting the yen, which would be indicative of the market going higher. So that thesis that I'm talking about, where we just blow off the top here and through the 200 moving average, that is tied to my yen trade, I would say pretty closely, the yen short. So that's how I'm playing it. Let me know your thoughts and comments, and we'll talk again in the next video.